All right, what's going on, guys, and welcome back to the channel. My name is Baby Shaq, and I'm here to help you become profitable. Don't forget to like, comment, and subscribe. And without further ado, let's get right into today's daily recap on what was going on, daily analysis, whatever you want to call it. Because today I did not take any trades because I was busy this morning. So if we go starting on the 4-hour time frame, or actually let's start on the weekly time frame. If you've been here for a little while now, then you kind of already know what I expect off of the weekly chart. But anyway, if you have not, let's do a quick overview of that. So we have higher highs and higher lows being created on the weekly time frame. And so I'm expecting potentially a higher low setup to then create a higher high on the weekly time frame from here to here. So we have a weekly imbalance that we are now trading or traded into. And so I want to see if we can get a bounce out of this lower weekly area. We are also inside of a weekly order block, which is this last down candle before the up move to break that high. So let me mark this as our order block, and let's do something like that. So just to say that one more time, this is the last down candle before the push to the upside that also created imbalance. So this should be, in theory, a strong area for potential buys, and this was the manipulation candle on the weekly time frame before price went to the upside and swept this weekly high. So now let's go down to the 4-hour time frame, and let's see what I expected to potentially happen today. So on the S&P 500, we have lower highs and lower lows that are being created on the 4-hour time frame. We had this higher high, and then from here we had the 4-hour breaking structure to the downside. And you can see the trend is kind of very clear on the 4-hour time frame. But if we go to MNQ, which is, or let's go to NAS. If we go to NAS, we can see that it has the same structure for the most part. So we ended up getting that lower low today. So coming to the S&P 500, we can see that this was our 4-hour lower high for the day. LH stands for lower high, and then we can get rid of this. We can mark this off as our 4-hour structure break, or wick, whatever you want to call it. I call it a structure break, but people like to say that this is technically not a break, which in a way it's not, but I count wicks as breaks. You don't have to. You can count candle body closes, such as this one below the lows right here, as a technical break of structure, and this maybe not. So it all depends on you and your preferences. So now we can go to, let's say, the 30-minute time frame and see if the 30-minute can give us some type of entry. Looking at the 30-minute time frame, it looks very similar to the 4-hour. This is our 30-minute time frame structure, at least how I map it out. And boom, boom, boom. And then right in here, we get a shift to the downside. So if we look very closely, we have a down candle and then an up candle that breaks the highs right here, and we sweep. So we get a break and a sweep, and then this will be my 30-minute break of structure. And then this will be the area where I would have been looking for sales today on the S&P 500 based off the 4-hour structure. So you could have easily did something like this, and then traded down into some of these imbalances, which we could have seen some type of rejection out of, or targeted some of these relatively equal lows down here. And the risk to reward today was very good, as you can see. let's go down even further after we get this 30-minute break of structure to see if we could have gotten a refined entry on a lower time frame. So I also sometimes draw a little trend line like that. And let's see if we could have got a refined entry on this time frame. So we're on the 5-minute. This is our 30-minute break of structure from this high to this low. And this is also our 5-minute structure coming in right here. So what we can do now is label this 5-minute imbalance right here, and then go down to an even lower time frame to see what we could have came up with. So somewhere within this 5-minute imbalance, I would have wanted to see, obviously, this 5-minute high hold, 5-minute lower high. And let's also take a quick check to see if there was an SMT at the highs. So this is the S&P. Let's go to NAS. And let's see if there was any type of SMT. So there was no SMT today at the highs. You can see right here is the S&P high. Right here is the other high. And then same thing for the NASDAQ. So no SMTs were happening at that moment. None over here either. So all good. SMTs are not a requirement for you to take a trade. It's just another confluence to show you manipulation. So like I said, we get a 5-minute break of structure as well. We can put that right here, 30-minute break of structure and 5-minute break of structure. So now we can go down to the 1-minute time frame and see what we were given. So right here, you can see we get a 1-minute break of structure to the upside. 1-minute break of structure. We also have a 1-minute trend line that has formed. We'll mark it off right there. 1-minute trend line. And then also when we tap into this 5-minute imbalance, we start to create a 1-minute imbalance right here, which could have also been another entry. 1-minute imbalance. So now how I probably would have played this if I was playing it super safe. The super safest entry for the 1-minute time frame will be the 1-minute break of structure and then the confirmation of the continuation of that trend line break. So this is the safest entry right here. Then we also have the entry of the trend line break. And remember, entries and exits all just really depend on you and how you like to trade. So I'm giving you multiple ways to enter this trade and multiple places to put your stop loss. So stop loss I would probably put it above here. So this imbalance can cover it and possibly reject us lower, but typically it will be like around here, same spot. And then also the earliest entry would have been the strong rejection right here. Stop loss is above here. And then the best entry would have been at this imbalance, the first creation of this 1-minute imbalance right here with your stop loss either above the high or above this candle or right above the imbalance. It doesn't matter. Wherever you see fit. I probably would have had it above the rejection candle high though if I entered in off of this spot. And then of course, like I said, wherever you plan on targeting is up to you. But with the best entry, let's go to a 30-minute time frame to find out where we probably would have got out of this trade. I probably would have got out at this low. So let's see what kind of RR that was. The best entry would have been a 4.3 R. This entry right here would have been a 2.3 R, which is still pretty good. This one's a 2R, and this one's probably close to a 2R as well. A 2.2. So all of these are really good entries as to this trade setup. Now, of course, you can see if we're going with the overall structure of the 4 hour, we could have targeted the 4 hour low, which gives you an insane risk to reward of 8 for that one. And then this being the best one, a 13R trade. But I definitely would not have held my entire position for a 13R trade for sure. Um, let's look at a little bit more. So this was the 1 hour structure for me. We went up and then we broke back below. So this was the 1 hour high, 1 hour low. Then we started pushing back to the upside. And then right here, we end up realigning with that 1 hour, coming back, testing it, and then pulling lower. So everything today said sells pretty much. I do want to see at some point we start buying up because the weekly is still technically bullish for me. So we do have a weekly imbalance. It's not a huge one like this one right here, or even this one. It's a pretty small one, and we have a pretty strong push down. So we could be coming down to this. Where is it at? This gap on the daily time frame, because price closed here and it opened up here. We did actually fill it on the S&P 500, but I don't think we filled it on NAS. So let's go check out NAS or MNQ. So this was a daily gap. You can see this candle closed right here, opened right here. So we still have some of this gap inside of here to fill in on NAS, but we did fill it in on the S&P 500. So curious to see what happens within the next couple of days. We have some pretty strong pushing selling pressure to the downside, black, but we have not created any imbalances inside of the pushes to the downside. So you can see over here, where are we? Right here, we have imbalance with the push to the downside. Right here, we have no imbalance on the pushes to the downside. So we could be seeing a pop up like this within the next few days. So we just got to wait for something like that. See if we can actually get a pop up and break and continue to go up, or if we're going to get the same similar price action, a pop up, then a pop right back down. So just sitting and waiting on that. Let's look at a little bit of past price action to kind of anticipate what else is going to go on. You can see right here, no imbalances on this wave down. And once we started going back to the upside, we ended up just pushing straight through the high. Right here, you can see also no imbalances on the push down. This was more of a sideways. This looks like a wedge type of pattern, and then we get a breakout and we continue to the upside. Pretty heavy on the daily time frame. And then just looking for one more spot. Let's see, daily break of structure. Daily break of structure. You can see right here, no imbalances on the push down. Still kind of get that wedge type of pattern, then a push back to the upside. So this is also a good example. You can see right here, we do create imbalance. We end up coming into it. We get a small rejection and then a push to the upside, which tells me that these sellers are no longer valid, but we do have sellers right here. But the buyers end up taking back over because they push through the seller's high right here initially. Let's take a quick look at gold and see what gold gave us this morning. I haven't been trading gold lately just because there was one day where I was looking at gold and not the S&P or the NASDAQ, and I missed trades essentially on both gold and the S&P. So I'm kind of like just cutting back a little bit on that. This is kind of what I had, I believe, for like the 4 hour, 1 hour, or the higher time frame, something like that. So kind of created a wedge pattern. We're kind of breaking out now. This is a potential breakout entry on gold to see us potentially continue up and go higher. So that's kind of what I see at the moment. We're holding this trend line on the way up as well, but notice once trend lines break, you usually have like a pretty strong push to the upside or downside. For example, you can kind of see we held a bunch of the highs. Once we actually broke out, we had a pretty strong push to the upside, breaking out of that consolidation. So we can expect a similar thing here. We kind of broke out, retested, and now we could see the potential push to the upside. And if we're pushing strong to the upside on gold, then a lot of times you can expect that the S&P will be headed in the opposite direction, because that's typically how they work. When one goes up, the other goes down, because people are like swapping their long-term positions or money that they're investing. I pretty much think that's it. I'll go over quickly kind of what my model is. Typically, I'm looking at the 1 hour time frame, and I just want to see a 1 hour break of structure to the upside, something like that, with then a pullback on the 5 minute, maybe even the 10 minute. Excuse me. Woo. And then a break of structure on the lower time frame, whether that's the 15 minute, 5 minute, 3 minute, whatever you deem fit, with some imbalance, and then a continuation to the upside, targeting some internal liquidity or the outside liquidity. And that's typically how I frame my trade setups. I also usually want to see some type of imbalance inside of here that validates this as being a good demand zone or supply zone, depending on if I'm buying or selling. So just a quick example of that. Where can we go? We'll go to the S&P real quick. Why does that look different? Okay, so yeah, this was a little confusing earlier. Let me delete this real quick. This was a 4 hour break of structure to the upside for me. So I was bullish on the S&P, but we had to come back down and get a rejection somewhere in this lower area, and a change of character on the 30-minute time frame to then go up. But you can see we never got that. 30-minute or the 15-minute needed to do this, and then that would have validated me taking buys on the S&P or the NASDAQ. But you can see instead we got the opposite. We had to push down, and then we just kind of continued down from there, just melting lower. So what could happen now is, now that we're getting lower in that weekly leg, is that I could see this 30-minute high get broken right here. Once we go below this low, this will be a 30-minute high for me. And once we go below here, this could be the liquidity that can then fuel us to start seeing some buying pressure come out of this market. But with how strong the selling is right now, I don't know if we would continue up to break the high. But there's definitely plenty of liquidity for us to tackle on the upside as well. You can see it right here. We also have this gap in here that gapped up, and then we gapped down. So that's all for this video. I hope you guys enjoyed it. Don't forget to like, comment, and subscribe, and check the description where you can contact with me and link up with me, where I teach in my Discord as well as one-on-one. All you got to do is click the link and find out, so I can help you guys become profitable. Don't forget to like, comment, and subscribe, and I will see you guys tomorrow. Oh, and P.S. Topstep went down again today. That's another reason why I didn't take any trades off of my phone, because I tried to, and as soon as I did, it started glitching out. So I ended up about right before this video just locking out all the accounts. So the accounts are pretty much still the same. 50. This one's minus 667. 52.1 profit. 52.4. 51 and 51.4. So Topstep needs to get it together, because I really can't I can't trade or trust the platform if they're going down every day and glitching and having to reset the accounts and things like that. I worked pretty hard to get the accounts where they are now so I could be maxed out on the accounts. But, if they're going out every other day and making me have to reset the account, then it's kind of pointless. So I will start to look for another prop firm to start getting some allocation on, as well as looking into just trading my own money, which I do a little bit on options now, but options I don't like it as much as I like futures. So stay tuned for that. I'll be talking more about that, and I'll catch you guys tomorrow.